And
Hi, Ken. Hi, Steve.
Hi.
Hi, Jen.
All right. Wow, cool. All right, great. Well, it's 2 minutes after, guys. So looks like we got a nice attendance. We got 60 people here already. We'll probably have a few more as time goes on. Welcome. And I don't know how many of you have ever heard Jake Bernstein speak in the past, but I have been to a number of the traders meetings in Vegas and such, and Steve has too. And always good information, always great conversation and discussion and great ideas. So I am going to basically just turn it over to Jake, and I'm going to try to, between Jennifer and I, will try to manage the people coming in and try to keep the people's microphones under control so we don't have lots of extraneous noise coming in. So Jake, you want to take it away?
Why don't we wait about 2 more minutes to let people log in, okay?
All right, if you're up for it.
Yeah.
We try to get pretty close to on time, and most people are pretty cognizant of being able to be here on time.
yeah,
We
we've
usually
been
meet in
trained.
person.
We've been to enough of these meetings. We've been trained to be on time.
Well, we will almost be on time.
All right.
Yeah.
Am I
Hi,
loud?
Jake. Hi, Jake. This is Jack Beiser. Thank you very much for doing this for us. I truly appreciate that.
Jack, thanks for inviting me. I've got nothing else to do on a Saturday sheltering. Only thing other thing I'd be doing is getting a vaccine. So,
Well, hopefully that'll happen soon.
yeah, we'll see about that. And then all we have to do is hope it doesn't kill us. Okay.
Well,
Yeah. All right.
I'm ready to go.
All right, Jake, go for it.
So let me share my screen and put my PowerPoint on here. A moment, please. Can you see my screen?
Yes.
yes.
Go full screen on it. Okay, ready? Thank you very much for inviting me. I think we will all have a good time today. One thing I will say in starting is this. I've been in the trading business for 52 years. It never ceases to amaze me how many people lose money trading. I just can't believe it. So the bottom line is this. I have one goal today besides entertaining you, and that is I want to give you good information so that if you're making money, you will make more. If you're losing money, you go from being a loser to being a winner. And if you're struggling, you will find clarity. As you know, the session today is free. I've lectured about 830 sessions all over the world, live webinars, live seminars, many different seminars all over the world, as I say, at exchanges, everywhere. And one of the things that I've learned is this. If you give somebody something for free, they don't value it. It's like the market. It's all about perceived value. You take the same product that's free and sell it for $189, you've got 50 people. You sell it for $2,000, you got more people. So it's all about perception. So please remember what I'm showing you today, even though it's free, is very valuable. It's not worthless. So please pay attention. So let me begin by giving you the usual disclaimer that everyone hides behind. You've seen it a million times. So while I'm talking, you may want to read a little bit about what I do. I want to begin with a true story that happened to me just recently. I live in the Santa Cruz Mountains, about 11 miles north of Santa Cruz. I try not to keep in touch with my neighbors. They're usually far away. The less I see my neighbors, the better off I am. Most of the time, I might see them at the mailbox or something like that. Most of the people here don't know what I do. I tell them I'm a writer. The reason I do that is this. If people know you're in the business of trading, they will want information. If they want information, no matter what you do, no matter what you tell them, you will be a villain. If you tell them the market's going up and it doesn't go up, they hate you. If you tell them the market's going up and it doesn't go up enough, they're not happy. If you tell them to sell and it doesn't go down, they're not happy. If they make money, they haven't made enough, they're not happy. So I try to stay out of the whole routine. But about 3 weeks ago, I saw a gentleman at the mailbox who told me he was putting an addition on his house. I got into a brief conversation with him behind my mask, and he said he was building a trading room. I said, "Oh, you trade? What do you trade?" He said, "I'll trade anything that moves. Would you like to see my trading room?" Well, being curious, I went for a walk with him to his trading room. And what I saw there was absolutely stunning. He had built a giant addition to his house, 6 giant screens, 4 computers, hardware all over the place, prices everywhere on the screen. And I said, "This is quite impressive. I have a question for you. Are you making money with it?" He said, "No, not yet, but I'll learn." This is very typical of what happens in the business. People buy all sorts of things they don't need. They try to make things work by making them more complicated. He told me he was using artificial intelligence. I said, "How about using actual intelligence?" The bottom line is, things that work, at least for me, need to be simple. I have been all over the map, trading expensive strategies, developing my own strategies, trading basic strategies. And what has made me money consistently is the most simple methodologies. I'm going to show you some of those today, but it's not going to be the usual stuff. It's going to be very different. If you've seen my work before, you know what you're in for. So here's a little bit about me. Maybe you've had a chance to read it. I'm not going to brag on it. The credentials are pretty good. We'll go to the next slide. For just a moment, please. Let me just switch slides. Come on, computer, cooperate with me. One moment, please. Okay, so what I won't do today, something very refreshing. I have nothing to sell you. I don't care if you buy anything from me. It makes no difference to me. I've made my money. I don't need your money. If you like my information, it's available. There's going to be no looks like, no interpretation, no Elliott wave, no magic stuff, no Fibonacci, no Gann, no fundamentals, no economic theories, no politics, no predictions, no chart patterns. We will deal only with facts. It took me 15 years to learn that if I'm dealing with facts, if I'm dealing with things that are not subject to interpretation, I will make money. But as soon as I delve into the realm of interpreting, analyzing, comparing notes with somebody else, my goose is cooked. I won't make money. I'm going to show you 3 specific methodologies today: where to get in, where to get out, maximizing profits and losses, and I will give you some specific trades of what's going to happen. I already know what I'm going to be trading for the rest of the month, for the rest of the year. In fact, I already know what I'm going to be trading in January. How do we do that? Well, the bottom line is we do that with strategies that work, that have historical validity, which is not to say that they're perfect. Nothing I do is perfect, but it is highly reliable, and you're going to see that yourself. So the bad news is this. Even though I'm going to show you stuff that's completely objective, 100% rule-based, will always tell you exactly what you need to do. The bottom line is, most of the hundreds and thousands of traders that I've met all over the world in the last 52 years don't have the discipline to follow a strategy, even for a week or 2. I'm sure that does not apply to anybody who's here today, so I won't even bother wasting your time with that idea. Go to the next slide. So imagine the new trader, the Robin Hood trader, the individual who says, people are talking about trading. I can't do anything with sports, so how about we trade? That's a good thing to do. Let's take the stimulus check and open an account. They go to the internet and they do a search. The search is, teach me short-term trading. They get 433 million hits. So think about that for a minute. What are you going to do with 433 pieces of information? You have to filter through it and figure out what's good, what's not. Here's a course that's selling for $2,399. Is that good? Are the free ones good? What should I do? It's a dilemma. The average trader is lost. So the bottom line is this. By losing their discipline, by not knowing what to do, traders will lose money. But they're under the impression that if they have discipline, they're going to make money. People say, hey, Joe, no wonder you can't make money. You don't have discipline. Joe says, well, all right, you're right. I don't have discipline. Where am I going to get discipline? Well, why don't you read a book? Jake wrote a book called The Investor's Quotient. He wrote that many, many years ago. Read that book. I say, people, don't read my book. You won't find the answer there. Where does discipline come from? Discipline comes from confidence. Where does confidence come from? Confidence comes from strategies that work. If you don't have strategies that work, you won't have confidence in them. If you don't have confidence, you won't have discipline. To have discipline with something that doesn't work means you need to see a shrink. If you're doing something that doesn't work and you say, I'm going to keep doing this until it works, you're in trouble. So the bottom line is this. The first thing you need as a trader, if you don't already have it, is confidence. That confidence will come from strategy that works, which leads to the next question. How do you know what works? You know what works by back testing. We have computers. We can back test anything. So the days of looking at a chart and saying, it looks like it wants to go up, whatever the hell that means, those days are gone. The bottom line is, you can put it on the computer and you can get the numbers. If you don't have the numbers, you ain't got nothing. So the problem is, new traders are trading by the seat of their pants. They're reading a book. The book says, buy when it comes down to the trend line. Where's the trend line? It's right here. No, it's not that. That's a different trend line. Well, wait a minute. It's not hitting the trend line. No problem. Make the line a little bit thicker so it hits the trend line. That is wasted stuff. It's useless. You will lose money. So the bottom line is we need strategies that work. Strategies that work are clear and pattern-based. The most successful trading strategies are based on patterns. There's thousands of patterns, but the bad news is most patterns don't work. How do we know they don't work? We put them on the computer and test them. Example, for many years, people have said, key reversals work. A day where you take out the low of the previous day, you take out the high of the previous day, and you close higher than the previous day, that's a key reversal. Go to the computer, program the key reversal, and guess what? Maybe it's 40% accurate. It doesn't work. Most of the things that people do don't work. In fact, 97% of everything I've backtested does not work. So what are you going to do? You're going to develop strategies that work and you're going to trade them. So I'm going to shortcut that for you by telling you this. The most accurate patterns are based on seasonality. I'm going to show you some of those today. We're going to examine some opinions and myths today, and we're going to dispel those myths very quickly. Now, people bring me charts, and they say, hey, Jake, what do you think of my chart? I look at the chart and I say, this doesn't mean a damn thing to me. It's confusing the hell out of me. What is it? If you don't know what it is, don't use it because you're going to lose money with it. The fact of the matter is this. There are hundreds of indicators. Most people don't know what the indicators mean. And here's the problem. Most indicators look the same because most indicators are based on price. You're trying to predict price with price. You need other factors. You need other elements. We're going to look at some of those today. And by the way, I'm going to stop every 10 minutes for questions. So one thing we can do is look at cycles. Here's a chart of Bitcoin. Can you see my chart, everyone? Okay, good. Chart of Bitcoin. We've taken the Bitcoin chart and we've run it through a cycles analyzer, which is a mathematical program that finds all the patterns in price and makes one pattern that's predictive of what's going to happen. This was the Bitcoin pattern chart that we published not too long ago. The purple is the ideal cycle, which combines 3 cycles. Questions?
You're welcome.
Thank you. Thank you very much.
You're very welcome. Who's talking?
Is it important or not?
Of course it's important. Okay,
Jake,
So-
I don't think that question was for you. Somebody forgot to mute their mic.
okay, it's still important. Okay, so here's the purple line, which is our forecast. The solid line is what Bitcoin actually did. And you can see that well over 6 months ago, we predicted this would be the high in Bitcoin. Let's see what happens. But guess what? This is only one part of the equation because these cycles are not perfect. We need a second element. So this would be what I call a setup, and we need a trigger. I will show you setups and triggers today. Setups and triggers need follow through, which is another word for risk management. We will do that today as well. So let's get a closer look on some other stuff. Let me give you an ideal situation. I'm going to show you what saved me many years ago. And I respectfully submit to you, even though I know I'm dealing with some very experienced traders, I don't want to talk down to you. I'm going to show you a list, in fact, 2 slides. I respectfully submit to you that before you take any trade in any way, shape, or form, if you're a serious trader, you will consider my list. Respectfully submit to you that if you don't know everything on my list, you're headed for a loss eventually, or you're going to get minimal profits. When I trade, I want to know what stock, option, or commodity to trade. I want to know what to trade, which market. I want to know whether to be a buyer or a seller. I want to know the exact time of day to buy or sell to within 1 minute or less. I'm going to show you how to do that. I want to know what has been the track record of my procedure, my average profit, my average loss, my stop loss, my profit to loss ratio. Am I making more money when I'm winning than I'm losing when I'm losing? I want to know every single trade that this strategy made, or at least have it available to me. I want to know my average profit and loss in points and percent in dollars. I want to know what was the largest profit or loss I ever produced with this strategy, my maximum drawdown, my maximum upswing, number of consecutive losses, number of consecutive profits, the accuracy, how to minimize potential loss, how to maximize potential profit, when to move my risk to 0, when to exit my position. I want to know all of these things. The good news is these are all knowable. The bad news is most people don't know them. The bottom line is this: the more of these 19 things that you know, the more likely you will be to succeed. And believe it, for me, I have been all around the block. It took me 15 years to become profitable. Fortunately, everything on this list saved my life. And I will show you how all of this is available. Let me say one more thing. No disrespect to anyone. If the strategy that you're using doesn't give you the ability to know all of these things, or at least most of them, then ultimately you will lose money. You'll be frustrated, you lose discipline. I'm sorry, but that's the way it is. If somebody says to you they've got a methodology, you need to look at a chart and interpret the chart, and they say, and you say, can this backtest be backtested? They say, well, we can't backtest it because we have to write the algorithms, and we can't do that because the code is not perfect. We don't have all the rules. If you don't have all the rules, you've got nothing. Apologies, you've got nothing. Let's go to the next slide. We're going to look at high odds key date seasonals. We're going to look at the moving average channel today, and we're going to look at the trading model. So let's begin. Seasonality, the tendency of prices or economic data to move in a predictable direction at given times of the year. We have got seasonal trades, seasonal patterns that have been in existence for 80% of the time or more over 100 years, and we can find them. And these seasonals will answer all of the questions on my list. Whether you believe them or not is not my problem, but I will show you some things that will blow you away if you're seriously interested in trading. Let's take this chart. Here's a chart covering the last 100 years of the Dow Jones. I'm not talking 20 years or 30 years or 10 years. I'm talking 100 years. What is the chart? I have taken every year of the Dow Jones from 1920 to 2019. I've taken every year and made one chart that represents the entire year, the typical year. We've normalized all the data. So for each year, we took the highest price and made it 100. We took the lowest price and made it 0. And this is the seasonal plot that we get. Now, there's more information here that's even much more important. These numbers at the bottom of the screen represent the percentage of time the Dow Jones has gone up or down that week. Example, this week, first week in April, it's gone up 67% of the time compared to the week before. The second week, 64%. The third week, 67%. We've placed an arrow up, and every week that has statistical significance, meaning this could not happen by chance more than once in 10,000 times. So we're dealing with something that's statistically reliable, or in other words, not guaranteed to make money, but guaranteed to be successful most of the time. You will notice some weeks stand out. First 2 weeks of July, last week of August, first week of October, and of course the end of the year. So I'm interested in this not only as a pattern intellectually, but hey, the bottom line is I want to make money with this. I want to zero in on this period of time. I want to zero in on this period of time and find a trade, find something that will make me money. The plot on the line indicates not only is this an uptrend with high probability, but it indicates a strong uptrend as well. What can I do? I'll show you in a moment, but first I'll pause and see if there's any questions that you'd like to relay to me. I don't want to lose anyone. No questions? Okay, I'll continue. Let's take the computer and zero in on this period of time, first 3 weeks of April, and ask a question. Can I research anything in these periods of time that I've indicated and get an answer? I go to the computer and I run a program called Seasonal Trader. Program says to me this: in the Dow Jones, if I bought end of day April 7th, got out end of day April 16th, every year, I would have been profitable 81% of the time. I'm sorry, 75% of the time, to the tune of 81 Dow points, or 1.95%, and so forth. So in terms of the list that I gave you before, does this answer the question? It tells me the market to trade, the date to get in, to buy or sell, the date to get out, my stop loss, my profit to loss ratio, every metric that you could possibly imagine, with one exception. And that exception is, will it work this year? This was the data through 2019. The question is, what happened in 2020? Here's the chart for 2020. We took it to the S&P, the Dow chart looks the same. And here's the date to get in, here's the date to get out. So without knowing what was going to happen in 2020, the prediction turned out to be profitable. Not only did it turn out to be profitable, but it picked within 1 day of the low. Now let's ask a question. What if you were a thinking trader, which you want to not be? If you were a thinking trader, you're looking at the chart and you're saying, well, wait a minute, it's in a downtrend. I think I'll wait another day. You wait another day, and now you say, well, it's in an uptrend now. I don't want to buy it now because I would have bought it over here. I'm going to wait. You missed the whole move. So the bottom line is, here's a trade that we knew ahead of time. It was near perfect, not successful every time, but it told us everything we needed to know. Let's go to the next slide. I'll cover this later, but the bottom line is this. We use science, logic, and statistics to get the edge, and we do what I call fact-backed rules-based trading. If I don't have a rule for it, I'm not going to trade it. If I don't have a fact, I'm not going to trade it. My facts need to be backed by rules, and my rules need to be backed by facts, and it's completely clear within a strategy that I use all the time called setup, trigger, and follow through. Let's go to another slide. Here's another one. And by the way, there are about 3.5 million of these that occur every year. Your problem is not, and if you follow this method, your problem is not going to be having enough trades. Your problem is going to be having too many of them. So we need to find a filter to get rid of some of these trades and stick only with the cream of the crop. So if I've brainwashed you sufficiently up to this point in time, you're looking at this chart, you're seeing weeks up, high probability weeks down. We could go to the computer and find the specifics on these dates. But what you're seeing here at the end of the year is very impressive. In fact, for the month of November, beginning in late October, you're seeing 1, 2, 3, 4, 5 weeks in a row of up arrows in 3M stock. And by the way, we can do this on any stock that has at least 25 years of history. The more history, the better. I want you to think about this. The more history, the better. In this trading business, people don't want more history. They want less history. Why? Because the farther back they go, the less profitable their methodology is. They will say to you, it's been working great for the last 6 trades. It's been working great for the last 3 months. Show me the last 30 years. It's not working so great anymore. No, nobody wants to do that. The reason they don't want to do that is the farther back you go, the less effective it is. With these methodologies, the farther back you go, the more information you get. The more information you get, the better off you are. The more information you get, the more reliable it is. Very important. So my next step, after I find this pattern, which is what this is to go to the computer and zero in on this time frame by doing an iterative search. I'm following this process called setup, trigger, and follow through. So what is a setup? The setup is a pattern. I've showed you some patterns to this point in time. A repetitive pattern. You have to be able to express it as an algorithm, as a tool. I'll tell you a funny story. Many times I'm invited to speak in Silicon Valley. So a couple of years ago, I was speaking to a group of engineers at a major tech firm in California, in Silicon Valley. I was showing these patterns. And I said, you know, this is a really, really important thing. We can take these patterns and we can do something that people couldn't do before. We can put them on the computer and back test them. Somebody puts up their hand and they say, hey, that is a great idea. I never thought about that before. So here's some engineers who can't even figure out what to do themselves. So the bottom line is, go to the computer and ask the pattern, see if the pattern works. You can't do that unless you can put it into rules. If you can't put it into rules, you can't use it. Please listen to me. Don't use it. Once you have a setup, you need a trigger. The trigger is what we call timing. I'll show you some triggers today. The next step is follow through. Follow through consists of 3 parts. Part number 1, where are you going to be wrong? What's your stop loss? People call me and they say, hey, Jake, I bought gold today. Oh, really? Why did you buy gold? Because I had a trigger. Okay, what's your stop loss? What's your risk? What's your follow through? Well, I'm going to risk $500. Why are you going to risk $500? Well, because that's all I can afford to risk. Excuse me? The market doesn't give a damn how much you can afford to risk. You need to risk what the market dictates. If the market is trading in a range of $2,000 a day, and you're only willing to risk $200 or $500, your goose is cooked. You're screwed before you start. So the bottom line is, follow through is not only having the right stop based on the strategy, but the most important thing, profit maximizing strategy. You need to find a way to turn that $500 trade into a $5,000 trade. If you don't know how to do that, you're not playing with a full deck. Next, let's talk about this. Good sense and nonsense. People talk about the 200-day and the 500-day moving average. You know, I've been on CNBC a number of times. I know how that show works. Commentators who used to be commentators 5 years ago are now market experts. They're willing to give you recommendations. They talk about the 200 and the 500, the 220 and the 50 and the 500-day moving average and the 200-day moving average. They say, well, the 50 crossed above the 200 today, so it's going to be a bull market. They don't know anything. They don't know what they're talking about, because if you go to the so-called golden cross, the 50 going above the 200, or the so-called death cross, the 50 going below the 200, and you put it on a computer and you ask the question, this is what you get, a miserable track record, 48% accuracy. It's at 27 major trades. It's been wrong most of the time. It's at 3 consecutive winners, 3 consecutive losers. To be in the winning trades, you need to hold the position for 492 days on average. You losers, you hold 66 days. This is completely cockeyed. People say, yeah, but it made money. Sure, it made money, but before it made money, you're dead because your account's finished and your discipline is shot. The 200 versus the 500, the 50 versus the 200, a losing proposition. Don't do it. How about this one in the Dow Jones? That was the S&P. 41% accuracy, 6 consecutive losers. And let me talk to you about that. Who can lose money 6 times in a row? The new trader comes to the market and says, I'm going to trade. They lose money the first time. They say, well, I didn't expect to make money the first time, so I'm okay with this. Let's do the next trade. They do the next trade, they lose money again. You say, well, wait a minute. I've lost money twice in a row? That really sucks. But I'm a guy who's got discipline. I read Jake's book. I'm gonna have discipline. They make a third trade, they lose money. They say, wait a minute. 3 losses in a row? This is no fun anymore. I've got to find out what I did wrong. I've got to change my strategy. The bottom line is this. Even the best trading strategies in the world will lose 6 times in a row. If a person is not prepared to lose 6 times in a row, either financially or psychologically, they're screwed before they start. So the bottom line is, you've got to know what you're in for. So even though the strategy here makes money, the fact of the matter is it's wrong 41%. It's right only 41% of the time. Now let's compare. This is one of my strategies. It's a short-term strategy in crude oil based on a very simple pattern called the inside bar. So what happens? Let's look at the track record. We're talking about 202 trades, 86% accuracy, 3 consecutive losses, 25 consecutive winners, average trade 2 3/4 days, 2.3 days, max consecutive loss. I'm sorry, you're in losers 5 days and 5 average days. This is a very effective trading strategy. Because we have these numbers, we can slice them and dice them, but you have to be aware of the fact that before it makes money, it can lose $27,000. So you need to be prepared for that. And if it's not something you're prepared for, the strategy is not for you. We can take the strategy, and because it's on the computer, we can do this. We can look at the track record. We can ask some questions and say, are you able to sit through something like this? Are these little drawdowns acceptable to you? Yes, it's that. And by the way, we started using the strategy back in 2004. We almost lost hope over here, but we knew the strategy was good and it's recovered very nicely. So the bottom line is, does the strategy fit your need? In addition to that, we can do this. We can look at it year by year and say, are the profits year by year acceptable? Are we okay with 2 losing years? Does the system come back and make money after it loses 1 year? Yes, it does. In addition to that, we can do this. We can run it on another system, on another market. For example, here's the same strategy on Japanese yen. By looking at these numbers, we know whether we can sit through this drawdown. We know whether this small profit over the course of an average trade in 3 days duration is worthwhile to us. We can take the 17 maximum consecutive winners and turn it into a maximizing profit strategy. This is all based on just one position. So all of these things are doable if you have the data. Let me show one more thing and then I'm going to take questions. Here's the track record. Very different than the one we looked at before. I've got a little red arrow showing all the periods of drawdown. In other words, negative performance. Has this strategy come back strong after every negative performance period? The answer is yes. So if you're thinking just a little bit, and don't think too much because you don't want to do that as a trader. If you're thinking just a little bit, you're saying, the best time to start using this strategy is after it's had a drawdown. So you want to wait until it's lost money. How often? You wait till it's lost money 2 times in a row. Then you take the third trade. Very simple use of statistics. So I've been jabbering here for a while. I'll be glad to take questions if there are any. Can someone relay questions to me?
Jake, what are you using for your backtesting?
This is called Trade Navigator.
Hmm.
You can do this on TradeStation. You can do this almost anywhere.
And a follow-up question, if you're trading options that don't have continuous contracts like futures, how would you go about backtesting them?
I'm not an options guy. So the way I would do it is take a look at the historical data. If you have historical data, for example, if we go back to the 3M trade, there's a 3M trade I'm going to show that lasts about 15 days. If you have access to historical data, you can look back and see how did the nearby option do during this period of time. But I'm, as I said, not an options guy.
Thank you.
You're welcome. Any more questions?
I got 2 questions. The first one is you showed that we should buy on April 6th or whatever it was and get out a couple of days later. What is the rationale for that? What is the reason for that? Why does it work? That's my first question.
Okay, let's answer the why question first, okay? I was told by a trader a long time ago, mine is not the reason why, mine is but to sell and buy. So I try to think about that all the time. People say the reason this works is because of taxes. People say that by the time April 7th comes around, people have paid their taxes. They know what they're in for, so they're now free to go ahead and invest some money. But in my case, I would share with you this. I have never made money knowing why something happens. Because if you think you know why something happens, you're going to expect it to happen. And if it doesn't happen this year, that doesn't necessarily mean that the concomitant price won't happen. So example, we know there's a great seasonality for the market to go up in November and December. Looking at the fundamentals this year, you'd say, it can't possibly happen. We've got an idiot who's president. We've got this, we've got that, we've got COVID, we've got horrible things happening all over the world. The market can't possibly go up. So that's the answer to the why question. I never ask why, but for most of these, there is a reason why. I'm going to show you a trade later in Deere that's been right 90% of the time. I know why that happens, but go ahead and ask the second question, please.
How do you trade? Do you trade daily bars or do you trade minute, 5 minutes, 10 minutes? What is your setup? I mean, what is your method?
What do I do?
Yeah.
I'm a short-term trader. I wrote the 4 best-selling books from McGraw-Hill on day trading. That was when day trading used to be profitable. I am anti-day trading now. It does not work for most people. The machines will beat you every time. You're going to work 10 times as hard to make half as much money. So I do not do intraday trading anymore. Although some of my trades that I put on during the day end up to be day trades by necessity, they're not entered into as day trading. And I encourage people to not day trade. It's a waste of time and a waste of money unless you trade really huge positions for small moves.
So you use daily bars or, you know, okay.
Yes, thank you.
Thank you.
Yes. Any other questions? Okay, let's go.
There's a question in the chat here from Bob M. How do you manage your risk? What is the exact place at which you are confidently wrong and able to exit?
Every trade has its own risk factor. That risk is measured in % of entry price. So when I get into a trade, I know ahead of time what my risk is going to be. If that risk is unacceptable within the context of my account size, I either take a smaller position or no trade. Therefore, the market itself, the methodology itself determines my risk, and I don't determine that ahead of time. So when people say, I want to risk $500 on every trade, that's not viable. It's the same as saying, when I make $500, I'm done for the day. That's stupid. You want no limit on how much you can make a day. So I think I've answered the question. Any others?
There's one more in the chat asking, what time frames are you trading right now?
Daily and weekly. I'm not trading monthly because that's too long-term for me and I'm very impatient. And besides that, when the next big moves happen, I'll probably be dead. So I want to trade just the short-term trades and weekly trades, usually within the context of about 5 to 15 weeks. And in the day trade and in daily methodology, about 3 to 5 days. So let's go forward. Here is the strategy. And by the way, you want to have a track record for everything you do. If your methodology can't generate a track record for you, you're not going to make money. You may make money in the short run. You may get very lucky. You may be psychic, but that's no way to trade. So when I look at my track record, I know exactly what I've done. I know exactly where I've been. I know how many trades I've made this year in this particular strategy. I know the average profit, the average loss. I know everything I need to know, including the length of trade that I'm in days. If I don't know that, as I said before, you're not playing with the full deck. Let's go forward. I want to be able to take my strategy and have the computer automatically put it on a chart. So the strategy that I'm showing right here goes on the chart. It tells me what to do. This is a buy. This is an exit. This is a buy. This is an exit. Very small short-term strategy. We're not looking to make big bucks on this strategy per trade, but we're looking to be high accuracy because, as you can see, the accuracy of the strategy is almost 90% for many years. So let's go forward a little bit. And by the way, I'm not interested in selling you anything. I don't care if you buy my stuff. I want you to buy my ideas and they're free. Let's go back to seasonals. Here's my search engine for seasonal trades. I go to the search engine and I look at a vast amount of history on a bunch of stocks or futures. In this case, I chose 3M and I chose October. Why did I choose October? I'm going to take you back to the 3M chart, so just bear with me for a minute. Here's the 3M chart coming right up, believe it or not. Here we go. I chose October because I want to ask the question of the computer. Is there a trade that begins in October that might carry through November that takes advantage of this historical fact over here? So in order to get that answer, I've got to go to an iterative process. I've got to go to a search process. The computer is going to search the data for me. Now, in the old days, this used to be called data mining, which was a dirty word back in the day. But now data mining has become artificial intelligence. Look at a whole bunch of data and try and ferret out some relationships that are predictive. So I go to the computer and I say, computer, for all of the data that you have on 3M, going back as many years as you can, for the month of October, have there been any trades that have been right 75% of the time with a stop loss of less than 100% that have had a duration of 25 days or less and a profit to loss ratio of 4 to 1, meaning when it's been right, it's made 4 times as much money as it's lost when it's been wrong. If that information is there, the computer will find it. And here's what the computer finds right over here. It says, buying 3M, October 30th, end of day, getting out, October 30th, end of day, November 30th, end of day, risking 9% below your entry price, has had a profit to loss ratio of 25 to 1, meaning this: if you added up all the winners and divided by the sum total of all the losers, your winning amount would be 25 times larger than your losing amount. You were right 82% of the time, and you had all these metrics, every one of which relates to the list that I gave you before. And I want to share this with you, ladies and gentlemen, please. The only way I've been able to make money consistently is by having rules. I have not been able to make money consistently by using my psychic abilities or my intuition or my gut feel. I can talk to an individual, a trader, for 5 minutes and tell you intuitively whether they're going to be a good trader. And I'll be right most of the time. But when it comes to psyching the market, my intuition sucks. It's terrible. It's the worst thing I've got. The only way I've been able to make money is by following these rules. So I share this with you. So what happens? We knew this trade for many years. So every year, this trade is made. So what happened? We had this information before the fact. just like I will show you my trades for the rest of the year. And this is what happened. This is what happened in October 2019. This was the entry date. This was the exit date. This was the move during the period of time. The first move was over 10%. Why is that important? Because right over here, it said my average profit would be 4.71%. So within a matter of days, I exceeded my average profit. I was able to put in a trailing stop. I was able to apply a timing trigger and take the trade. Now, let's talk about psychology. You know this trade. I told you about it ahead of time. You're looking at the chart and saying, well, wait a minute. It's going to be wrong this year. What a horrible downtrend. This really sucks. I'm not going to do this trade. The next day, it triggers to get in. You missed the trade. Over here, you're trying to figure out how to get into this trade. You've missed it. It's over. It's finished. You're done. That was last year. What about this year? Well, here's the trade this year. Entry date, exit date. Interesting. Almost the same thing. Why do these things happen? Because God wants us to make money, right? So the bottom line is this. Very simple, completely accurate, not perfect. It's only 80-some%. So what's going to happen next year? I have no idea, but I do know this. If I get a trigger, I will take this trade. Now, by next year, most people attending here today will have forgotten about the trade. They'll come back to a drawer and they'll find some notes 3 years after that. And I'll say, let's check this out. Let's see if it worked. And they'll say, oh my God, it worked for the last 3 years. What was I doing? What's wrong with me? Discipline. Let's go to the next slide. Was there a trade within this trade? In other words, during this period of time, was there anything else that was predictable? There was a shorter trade, a shorter term trade right over here. November 12th through November the 27th. Now you might reasonably ask, well, why did the computer give us so many possibilities? Because the computer is stupid. It can only do what we tell it to do. I said to the computer, give me everything that meets these categories right over here. Let me show that to you. That falls within these categories. And that's what the computer gave me. So I have to pick and choose? No. The computer took the best trade and put it in the first position and said, if you don't like this, here's other possibilities. I'm giving them all to you. So it gave me this one right over here as a smaller one. Less risk, less reward, smaller profit to loss ratio, and so forth. So let's go forward.
Jake, one question.
Sure.
What is your trigger on that previous that trade that went up? What was your trigger? You said everything is set up and your seasonal comes out, and then what is your trigger to actually enter the trade?
The trigger is the $2,000 seminar, which I'll be doing tomorrow.
Okay.
Okay. The trigger is called the 8 open close, which I'll be teaching later in this session today.
Got
it? Okay. So that's the little trade we looked at before. So let's change courses here. One of the best books ever written about the stock market is called The Behavior of Prices on Wall Street by Art Merrill. Like most good books, it's out of print. This book is now selling for $175. It's probably a collector's item, like one of these days, hopefully my books will be. But the bottom line is this. Art Merrill was one of the first people to talk about statistics and the stock market. He developed a theory called pre-holiday behavior. By looking at the stock market, the Dow Jones in particular, on the day before major holidays in the US, Thanksgiving Day, Christmas, New Year's, Easter, Good Friday, Veterans Day, 4th of July, etc., he discovered something really cool. Going back to the 1800s in the Dow Jones average, the stock market had a tendency to close higher the day before a major holiday over 70% of the time, which could happen by chance only once in 10,000 times, called pre-holiday behavior. But even pre-holiday behavior tends to mess people up because they don't have discipline. Let me give you an example. The pre-holiday behavior that Merrill talked about for Thanksgiving, USA Thanksgiving, is this. Hold on a second. Where is it? Let me find it. One moment, please. This. In the last 62 years, closing higher on the day before Thanksgiving in the United States has been 73% accurate. So the question is, what's the rule? Thanksgiving in the US is always on a Thursday. So we're looking at Wednesday's close compared to Tuesday's close. So the bottom line is you buy on the close of trading Tuesday, you get out on the close of trading Wednesday. That's all there is to it. But still, people will find a way to screw it up. They'll say, should I buy it Wednesday on the open? Should I wait until Thursday on the open? Should I get out Thursday midday? That's not what the rule says. The rule is very clear. But I had a different idea. My idea was this. Is it possible that somehow this effect of closing higher before Thanksgiving starts earlier? In other words, does it start a week or two before Thanksgiving? Is there a general positive attitude toward the market before that? I can only answer that question with statistics. I go to the computer and I say to the computer, find me everything in the S&P beginning in November and ending in December that has high accuracy. And here's what the computer gives me. It says, buying S&P futures, end of trading November 20th, getting out December the 4th. In other words, it includes Thanksgiving, has been right 81% of the time. It's had all these numbers associated with it and so forth. So you see all the numbers here. The numbers don't lie. The numbers are clear. The only thing that can confuse me about the numbers is my own thinking. I need to decide two things. Is there a trigger? In other words, is it most likely to happen again this year? Number one. Number two, is the risk acceptable to me? That's all I need to decide. If the risk is not acceptable to me in the futures, I can go to a mini future, a micro future, a call option, a call spread, a binary option, many different possibilities to mitigate risk. So this was the trade we were, and by the way, I advertise this every year. It's not like it's a big secret. It's available to anyone who wants it. It's just a question of whether you're going to do it or not. And for me, if I'm looking at something that's been right 81% of the time over the course of many years, that's okay with me. I'm happy with that. I can't do better than that. And if I apply a timing trigger, I'll do even better. And I will teach you the timing trigger later. So again, I published this trade in my newsletter several weeks before it happened. What happened? And by the way, this is the complete track record. 37 years. Every single year in S&P futures back to 1983, the start of trading. These red arrows show losing years. Very small losses. This is the track record over here, showing the cumulative performance. Let's talk about excuses. Everybody who trades loves to make excuses. Excuses why we're going to be right, excuses why we're going to be wrong, excuses to not take a trade, excuses to take a trade. What's the excuse? And by the way, ladies and gentlemen, I've shown this trade every year for the last 28 years. So it's not like I'm looking at it after the fact. I'm looking at it before the fact. The excuses this year were, we've got COVID, we've got international conflict, we've got a moron for president, we've got corruption in the government, we've got performance that has been too good, we have a looming recession, the government has spent too much money supporting people, we've been right too many years in a row, it's not going to work this year, obviously. Here's the trade this year. Entry date, target, hit. Very simple. Timing trigger, right over here, which I'll be showing you later. So that was the move. I'm sorry, that was 2019. Here is 2020. Entry date, exit date. Very simple, very straightforward. How about this? What about the so-called Santa Claus rally? Buy on the day before Christmas, get out on the day before Christmas, get out on the day before Christmas. What about the Santa Claus rally? I'm not smart enough on my own to know the answer, but I can go to the computer and ask the computer, for S&P 500 for the month of December, find me all trades that have been right 80% of the time with 15 days duration or less. And by the way, you can ask any question you want. If you ask a question the computer doesn't have an answer to, it'll tell you it's got no answer. So when I do that, here's what I get. And I show this to you ahead of time. Buying December 22nd, getting out January 7th, risking 4%, 78% accuracy, average profit 23 S&P points. So that's the trade. Live by the sword and die by the sword. By which I mean, if I'm okay with the risk at 4%, 4% of what? 4% of the closing price of S&P futures on the entry date, very specific, then this trade's for me. If I'm not okay with that, I can mitigate that loss, potential loss, with an option and so forth. So what am I going to do? I'm going to do this trade one way or another, either in the spider, either in the diamonds, either in the S&P futures, the mini futures, the micro futures, etc., or binary option. So what happened last year? This was the December trade last year. This was the October trade over here. The Thanksgiving trade right over here, sorry, the November trade. So let's talk about psychology, because believe it or not, and I'm sure you do, your worst enemy is always going to be yourself. Your training, the brainwashing that you've had. And the brainwashing that you've had has been this. Try and buy things on a pullback. If you try and buy them on a pullback, you get a better price. In buying on a pullback, you're catching the falling knife. You're getting into a trade that's moving in the wrong direction. And when you get there, you're going to look at it and say, this chart looks like crap. I'm not taking this trade. And now you're saying, I'm sorry I didn't take this trade. And now you come to the December trade, which is right over, and you say, wait a minute. Now it looks too damn good. It can't possibly work. I should have got in over here. I should have got in over here. I say, if you should have gotten in over here, you're that smart, then listen, smart ass, why didn't you do it? So the bottom line is, all I've got is the numbers. If the risk is okay, the numbers are okay, and the risk is okay, I take the trade. It's that simple. I'm not overthinking it. Let's go to the next slide. So I already have my trades for January and December, and here they are. These are my futures trades, and I'm happy to share them with you. Why am I happy to share them with you? I'll tell you why. Number one, I am not concerned that you're going to make too many trades and beat me to it. I am not concerned that this trade won't work because I've told it to so many people. Why am I not concerned? Because most people have no discipline. They will find a way to screw this up royally. Maybe everyone here will do it right. Maybe most people won't even believe me. It's okay with me. So let me show you what happened. This first trade, the November trade, has already happened, and it made a bunch of money. The next trade happened a few days ago. It was gold. And that was buying February gold futures, close the trading December 15th, getting out, close the trading December 26th, or getting out a part of your position at the average profit, which is $10 in gold futures. $10 in gold futures is $1,000. These trades are still coming up. I will wait for a timing trader on these trades, but let's take a look at the gold for a minute. This is the gold. Check this out. This was the entry date right over here. The very next day, which was Friday, if I'm not mistaken, we exceeded our target of $1,000 in gold futures, took 1/3 of our position off the table, and we have no further risk because now our stop is break even. Let's see what happens. So let's go forward. I'll stop in a minute and take questions. Do seasonal trades need a trigger? If you have a trade that's already working at 80% accuracy, you can't make it much better. If you use a trigger with trades that are at 80% accuracy, you have to accept the fact that sometimes the trigger will keep you out of a trade that would have made money. But many times you will have saved yourself by using a trigger. So you have to decide, are you okay giving up some possible winning trades to have a trigger and giving up some losing trades before they happen. This should say 8 open, 8 close. I'm sorry about that. My mistake. We use 2 moving averages for a trigger. 8 open versus 8 close. Let's take a look. Let me show you what I mean. Here's a chart. S&P. 2 moving averages. The red line, an 8 periods, and not 3, so please correct me. It is an 8 period simple moving average of the close, which is the red line. 8 SMA. The green line, 8 period simple moving average of the open. Moving average of the close on this day is greater than the moving average of the open. It's a seasonal day to get in. It's a trigger. That's all there is to it. Let's look at another one. Once we have our trigger, we can use the trailing stop. I will talk about the trailing stop later. That's the zigzag line. Let's go to another chart. Another table. These are my seasonal stock trades. So I want you to look at this trade right over here. Deer. 92% accuracy over the course of many years, December the 12th through January the 6th. So what happened? Let's look at the chart. Here's the chart of deer. Entry date, right over here. We're looking for an average profit per trade as our first target of 6.19%. What happened? We reached the target of over 6.19%. Target hit very quickly, and that's the deer trade with 92% accuracy. Will probably be 93% after these statistics are in. And by the way, the computer had none of these numbers before the fact. All it had was the history. Let's go to one more slide. Before we do the moving average channel, which is another method entirely, I want to take questions if there are any.
Yeah, Jake.
Yep.
On these trades, are you doing this at all with automation, or do you manually enter all of these trades?
I'm an old-fashioned guy. I want to see what I'm doing. I want to know what I'm doing. I've got an assistant named Carol. She's putting a lot of these trades in for me because I can't do it all myself. So the bottom line is, it's not automated. Could it be automated? Absolutely. And probably would end up doing it much better than me. But there are so many possibilities each week, each month. I want to make sure I evaluate them all within the context of my account size and my risk level. So the answer is it can be automated and probably should be.
Hey, I have generated a poll. You years ago had a cat trade, and if you could take a moment now, I'd like to take a moment and actually do a quick poll to see how many people took your cat trade.
Cat trade, huh?
Is that okay?
Sure.
Okay. So let me launch this poll. See how many people did that.
While he does that, Jake, I have a question. Did you say those SMAs, are they 8 period or 3 period? Because I thought the chart, your slide said 3 period.
Yeah, the slide is wrong. It should be 8 open, 8 close.
So it's when the close goes over the open, you go long.
8 MA close above open, it's a buy trigger.
Okay, thank you.
You bet. And by the way, you want to see the cat trade? Let me do this. Hang on one second. Let me go to another slide. Bear with me for a moment.
So it's interesting. We have a cat trade that went off on your cat trade. I'll show you, Jake. I entered it into our calendar on our Excess Profits website,
Okay.
and so it's been up there for years, and it keeps on repeating.
Mhm.
And last year, I think I made over 100%. I trade options,
Right.
and this year, I made a 50% return. So I want to thank you, and it looks like I'm gonna publish this poll here and let you see what the results are on our cat trades for our group here.
Well, let me do this. Can you see my screen?
Yeah.
I'm logging into Seasonal Trader. I'm going to do a search on the cat trade, so just bear with me for a moment. So we're going to go to cat. We're going to go to Seasonal Trades Stocks. We're going to go to cat. bear with me for a second here. And you said it was a trade in what month?
I think it was October. It was the October-November trade.
I'm going to highlight October and November. I'm going to say, show me everything you got. And here's what it comes up with. 86% win. November 19th through January the 6th. Average profit 7.95%. We're going to look at the history now. This may be the trade you're referring to. 50 years of history. Who gives you 50 years of history in this business? Here it is right over here. And that's the trade. So
what we had on our chart on our excess profits group calendar was enter the trade on the 26th of October.
okay.
And then exit was on Friday, the November 6th, but I actually made a mistake and held it to the 9th. It was really, really low on the 6th, but on the 9th, I did indeed get a nice 50% profit. So I thank you for that.
You're very welcome. So
And here is let me share you the results of this from our quick poll here.
Yep.
So
is that a surprise?
yeah, it's pretty amazing. So a few of us took it. 82% said they did not take the trade. Interesting.
No surprise.
So
No.
it's nice to be able to use this technology in the Zoom. It's educational and it helps not only the organizer, but it helps all the people in our group. So
Very much so.
and I thank you.
Thank you for pointing that out. Yes,
All right.
very good. And that goes along with the deer trade. So the question is the why question. Anybody have any idea why the cat trade works? Why would Caterpillar tractor go up this time of year and why would deer go up as well? Any thoughts?
I think possibly the reporting cycle.
Okay, any other thoughts?
I have a
Could it
thought.
be,
The fiscal year of the US government is October.
Okay, any other thoughts?
what about just general demand for crops, seasonal crops?
Good thought. Now let me tell you what it really is. In fact, hold on a second here. By the time the harvest is over, a lot of farmers have gotten their money. They've been paid by the government for crops they produced or crops they didn't produce. So now they've got a bunch of money. It's burning a hole in their pocket and they always love to buy new equipment. So that reflects in earnings. So that's my explanation for it. But the bottom line is, hey, I don't care as long as it keeps working. Any other comments or questions? No? Okay,
I have a bunch of questions again.
sure, I'm ready.
Actually, I think you answered my first question already with one case. I was wondering how many years are typically used in these statistical calculations. I think the cat was 50 years or something. Is that a typical number of years?
Most of it falls between 35 and 50 years. We have some that go back 100 years. Anything less than 25 years I won't use.
Okay, and is that included in the table that says how many years it is without having to click on the history?
Yes.
Okay. Second question, do you ever go short? All the trades you've talked about are long trades.
We have short trades as well, and they're very reliable, and they go down a lot faster than they go up. So we do have short trades as well.
Okay. How do you select what to trade? There's so many possibilities looking at those charts, both within an instrument and between them and long and short. How do you select?
I want to be very specific, so let me show you. In fact, let me see. Well, I won't get back to the website. I don't want to waste any time. When you put in your search criteria, that's how the selection goes. In other words, if you say, I only want to see trades that have been right 85% of the time, you will have fewer trades. If you want higher profit to loss ratio, you will have fewer trades. If you want shorter duration, you'll have fewer trades. So I make my decision based on what I can afford in terms of risk. I don't want to risk more than 8% on any trade, so I'm never risking more than 8% when I do my input. So that's one way. Another way, if you're still not clear, right, send me an email and I'll be glad to answer you more fully, okay?
Okay. And what is your typical annual return with all those trades combined that you're doing? And how many trades do you typically do in a year?
We have not had a losing year in 37 years, and typically we're generating about 77% in the average year.
Wow. And how many trades do you typically do in a year?
I'm doing about 4 seasonal trades a month.
Okay.
And that's in stocks and futures. I'm doing about 3. So a total of 7.
Okay.
I'm very selective. I could go crazy with this if I wanted to, but I really don't want to do that.
Okay. Thanks.
You're welcome. Any other questions?
I just have one. I'm interested because you're using the daily bar to
Yes.
view the stocks. What is there a favorite time of the day that you're entering these trades, or when are you evaluating? Sometimes the open can be very different from the close.
Oh,
Thank
yeah.
you.
If you're referring to the seasonal trades, all seasonal trades are entered on the close of trading. So we always put in a market on close order, or we're buying on the close. If we're not sure there's a trigger, by the end of the day, we buy the next open. So it's always the same. There's no question that the close can be very different than the open, but as long as we stay with the same strategy in terms of execution, it will serve us well.
Thank you.
Other questions? You're welcome. So look, let me emphasize this. I've been doing this for 52 years. I've been on every side of the business. I've owned a brokerage firm. I write newsletters. I've done seminars. I've done webinars. I've developed strategies. I've developed systems. I know the market extremely well. I have met literally hundreds and thousands of traders all over the world. I can tell you this, the more discipline you have, the more money you'll make. The more discipline you have will depend on your confidence. Your confidence, as I said before, will depend on your strategy. If the strategy is not specific, you will lose confidence and you will not follow a strategy. And that will ruin your discipline. So that's the one thing I'd like to share with everyone. It really doesn't matter what the strategy is. As long as you've got something that's better than 50%, you can still make money on it. But then it becomes a question of managing risk. So let me show another method, moving average channel. This has a little bit more moving parts, but after you've done some work with this, you'll be very pleased with it. So I'm using, and by the way, people say, Jake, why don't you use candlesticks? I don't use candlesticks because they confuse me. I don't want too much information. I want less information. The less information I have, the more focused I will be. I don't want to look at a chart and say, oh, well, look, here's the head and shoulders. That doesn't mean anything to me. The only thing that means something to me is within the context of what I'm doing. Any information that's outside the context of what I'm doing is useless information for me. For example, people will say, well, Jake, you use 5 basic methods. Do you compare them all? No, each method is standalone. I want to be a specialist, not a generalist. I don't want to be a general practitioner. If you go into the office of the general practitioner, your family physician, you're going to see everything in that office. You're going to see kids with pimples. You're going to see people coughing, people sneezing, people on crutches. You're going to see pregnant women. And that physician is barely making a living. You go into the office of your anesthesiologist. You're the only one there. Why? Because the anesthesiologist can only see one person at a time. They charge you $5,000 to put you under. You wake up living or you wake up dead. They've got malpractice insurance and they're making a ton of money. So I want to be a specialist. If I'm looking at the moving average channel, I'm not going to compare the moving average channel with the seasonal and say, oh, there's a seasonal to go down. Why is my channel going up? It doesn't matter. Both methods can be right. The seasonal can go up and reach its target and get you out while you're short the channel and you're not getting stopped out. So it's a very simple process. Focus on what you're doing. I want less information, not more information. Candlesticks confuse the hell out of me. So let's talk about this. Moving average channel, very simple. 2 moving averages. This one here, the red line. Is there a question? Okay, 10 high, 8 low. So the green line is an 8 period simple moving average of the low, 10 period simple moving average of the high. Please note, these are not closing moving averages. So this has nothing to do with the 50 and the 200. This is totally different. Bottom of the screen, Williams accumulation distribution, which is the blue line. I'm taking a 57 simple moving average of Williams AD. Note, this is not Williams percent R, this is Williams accumulation distribution. It is not the usual accumulation distribution, which is volume-based. This is price-based. Williams AD, 57 moving average of Williams. Very simple to do. So I'm looking for a specific pattern here. I'm looking for 2 consecutive price bars completely above the top of the channel, accompanied by Williams above its moving average, which gives me a buy trigger. Once I get a buy trigger, I need to buy, either at the end of the day, but better off in the channel or at the bottom of the channel. So this would be the aggressive trade buying right here. The conservative trade, wait. Wait for what? Wait to come back to the channel. Ultra conservative, wait to come back to the bottom of the channel. We know what the bottom of the channel number is every day, or if we're short, we know what the top of the channel number is every day. We trade by that number. Example, here's a buy setup and a buy trigger. Buying the top, the middle of the channel, you're profitable very quickly. Or buying the bottom of the channel, you're waiting for an opportunity to buy them on the bottom of the channel, and that opportunity comes. Your profit target, and by the way, it would take me about 2 hours to teach the strategy fully. I'm happy to send anyone here a copy of a video that I have called 6 Best Timing Triggers, which reviews everything I'm teaching here and a whole lot more, and it's completely free, no charge, no tricks, no gimmicks, okay? Just send me an email, jake@trade-futures.com, and I'll send you the video. So what happens? First, I want you to observe. Once you get a buy setup and a buy trigger, the trend continues higher for a long time. Every time you come into the channel is an opportunity to swing trade. And yes, before anybody asks, can this be used on day trading? Absolutely. I don't want to do it. I don't like it, but it can be used and it can be profitable. It's too much work. You have to remember, I'm an old guy. I don't have much time left. So I want to use my time very carefully. So what happens? Every time after your first 2 that you get another 2 outside the top of the channel, it's further confirmation of the bull move, or vice versa, the bear move. There's also what I call a 5-bar pattern. If you get 5 consecutive bars outside the top of the channel, there's very high probability that at some point in the next several weeks, you will achieve a target that is equal to the range of these 5 bars, high to low. I'll show you more momentarily. Let's go to the next slide. Oh, by the way, I swing trade this methodology consistently. This is my favorite trading strategy right here next to the seasonals. This is my performance, swing trading, okay? So I'm showing you my performance. This is my performance as well right here, compared to the other markets. So that's just in the swing trade account. So we did better than everything except the NASDAQ. So we're 28% for the year in my account. And this is a graph of that performance. But let's not talk about that right now. Let's talk about another chart. Gold. 2-bar pattern, buy setup, buy trigger, 5-bar pattern. The 5-bar pattern achieves its range over here. Every opportunity to the bottom of the channel is an opportunity to buy, because when you're swing trading, you're buying the bottom of the channel, you're getting out at the top, you're trailing a stop. Buying the bottom of the channel, getting out at the top, trailing a stop, stopped out at break even. So the stop goes to break even. From the original 5-bar pattern right over here, you will notice the market never came down to the original entry price after achieving its 5-bar target. Let's go to the next slide. Here's another one. 2 bars above the top of the channel. No trigger yet. Trigger over here. Follow through on the upside. Let's look at another one, and then I'll stop for questions. Tesla. What did Tesla look like just recently? Again, 2 bars above the top of the channel. Confirmation by Williams. Turns into a 5-bar pattern. The range of the 5-bar pattern is achieved somewhere here. Comes down to the bottom of the channel right over here. Swing trade buy, top of the channel target, etc. So now let me stop, because I realize I've covered a lot of ground here and I may have lost somebody, and I don't want to lose anybody.
Hi, Jake. For your entry, you're not necessarily hitting the low band. How are you deciding when to enter under these conditions?
There are two choices. Choice number one, the aggressive strategy, buy anywhere in the channel. The conservative strategy, buy only at the bottom of the channel. Okay? So the strategy that you're using, I'm using the conservative strategy. So this is my buy point on Tesla right over here. Over here, I'm doing nothing but waiting. You risk missing the trade if you're conservative, but you'll get fewer losses if you remain conservative. I answer the question.
Yes, thank you.
Any other questions?
And by the way, are you trading with a 3 period of the lows?
That is my trailing stop.
Okay.
Any other questions?
I noticed that, by the way, the 3MA gets taken out sometimes at the beginning. Do you wait for a day or two before you instigate the 3MA, because you already have a stop, which is the channel period, channel length?
Right, I'm waiting until my first profit target has been achieved before I use the trailing stop.
Mm-hmm.
In addition to that, if you wait for a close below the 3MA low, you'll get stopped out less often, but you have to give the market a little more room.
Mhm.
Okay?
So what's your
Thank
initial stop? What's your initial stop before you hit the target? Is it based on the data, the seasonal data?
No, it is based on 2 times the width of the channel. Example, buy setup, buy trigger, buy over here. Risk, take the channel, double it, and put your stop in twice the width of the channel, okay?
Thank you.
As I said before, compared to what I've shown you up until now, this is very difficult. There's a lot of moving parts. But once you learn those moving parts, you'll find some beautiful swing trades, as well as some beautiful entries if you are willing to be aggressive. And it won't be as easy as the seasonals, but it will be completely objective. Let me go to another one. Copper futures. 2 bars above the top of the channel, Williams above its moving average, buy trigger. My trigger is here. I take the channel width and I double it. I put my stop in twice the width of the channel below the entry, which would be somewhere down here. My first target is also twice the width of the channel, which would be achieved somewhere over here. And from that point forward, I have no effective risk other than the bottom, other than the trailing stop. And if you're waiting for the bottom of the channel, your first opportunity is right here. So look, there are many stocks, there are many futures. You will get a lot of opportunities. So even if you miss the big opportunity because you didn't want to take the risk, you still get to take advantage of the smaller opportunity, which is very high probability. Let's look at another one. Southern Peru Copper, again, same situation. Your first conservative buying opportunity is right over here. But if you don't care about missing the move, or if you want to do an option on this where you're mitigating the risk, no problem. There are literally hundreds of these every day on the long side and on the short side. I will show you some short side trades in a little while. There's a couple of trades on futures. Let me skip these for a minute, go on to something else. How about the short side? US dollar. 2 complete bars below the bottom of the channel. Williams below its moving average. It's a sell right away, or it's a sell at the top of the channel if you missed or didn't want to take this opportunity right over here. As you can see, going into the end of the day on Friday, you're still in a clear, defined downtrend. Any questions? Okay, let's go to the next one.
I got 2 questions.
Okay, good.
The first one is, do you have the backtest results for this channel strategy?
The backtest results depend on the market. In other words, with 5,000 or 6,000 stocks, you have to run each stock individually because it works better on some than others. I do have the backtest results on futures, which I'll be glad to supply you. Just send me an email.
Okay, yeah, I'd like to see some of those backtest results. That'd be great. Also, you told us the rules, but it's kind of hard to follow and remember all of them. Do you have it written down somewhere, the rules, so we can program it ourselves?
Sure, the video that I have available to you lists all the rules, and you can then go ahead and take a look at them, okay? Glad to see you with you.
Okay, and what was your email again? I didn't have a chance to write it down.
Email is right over here. It's jake@trade-futures.com. Let me show it to you. Hold on one second. My computer.
It's in the chat. So instead of, okay, yeah, okay, got it.
So there's my email address right over there, jake@trade-futures.com, okay?
Okay, thanks.
That's my high school picture. So let me go forward with this. Let's look at a few more. Bear with me for a moment. Okay, so let's go to markets like this. I happen to like this better on futures than I do on stocks because futures are more volatile and they have a tendency to hit the channel more often. Look at all these swing trades we had. Every single opportunity at the bottom of the channel has been profitable. Or like this, New Zealand dollar futures, if I'm not mistaken. Yes, I think that's the Kiwi. Hold on a moment, please. No, it's euro currency. Again, swing trading from the bottom of the channel is where this thing does its best job in terms of accuracy, but in terms of size of the move, you have to be willing to take the trade when it first develops. Let's go to the next slide. AMD, and again, buy setup, buy trigger, buy the bottom of the channel, buy the bottom of the channel, buy the bottom of the channel. And people say that moving average based methods don't work well in sideways markets. Well, there's a sideways market in crude oil. I'm sorry, what's that in? Not crude oil. Hold on a second. In Treasury note futures, look at all these opportunities to the bottom of the channel to swing trade. And S&P, Russell 2000, lumber, ETFs. Let me show you one more, crude oil. And I'll be glad to provide the presentation, the PowerPoints for you. Okay, so let me go back here. Just a moment, please. One more thing I want to show you. Right. There's another characteristic of the channel that you should know about. That is this. The channel gets narrow and the channel gets wide. A widening channel tends to precede an up move. A narrowing channel tends to precede a down move. So let's go back and look at some of these charts. Okay, here we go. Just one moment, please. Notice how the channel started to get narrow over here and preceded a decline. The problem with this indicator as the channel narrowing and widening is that it's not completely objective. And I try to stay away from things that are not objective. One moment, there was something else I wanted to show you. That was, bear with me for a moment. Be right there with you. Just bear with me. I can't find it. So anyway, in the video that I will send you, all of these different characteristics of the channel are specifically defined and clear so that you won't have any doubt whatsoever. You can go through the video as many times as you want. The rules are all there for this, for seasonals, for momentum divergence, and for the commitment of traders report, which I did not have a chance to cover here today. So I'm basically done and I'm happy to take questions.
Questions, anyone?
Jake, do you remember what your results were for trading the channel on, let's say, SPY?
The SPY result, 71% of those trades are accurate. And remember, that's just getting in and getting out. It's not with a profit maximizing strategy. I'm showing you the worst results, not the best.
And just so that I understand a little better, I like your idea of getting in within the channel versus outside the channel after 2 days. You said aggressive anywhere in the channel and conservative is at the bottom of the channel. The 71%, was that the conservative, aggressive, or any idea which methodology generated that?
It's a conservative approach.
Thank you.
You're welcome.
Jake, I have another question. I like the idea of having a bunch of stocks in a portfolio and acting on that portfolio, selecting the stock or whatever instrument in that portfolio that's most likely going to work with that strategy at that particular point in time. have you ever tried to select which one of your instruments to use for example, for the channel strategy at any particular time, using that one and then later using another one because of some criteria?
I think I understand what you're saying. Let me give you an example. Let's say we get a channel buy, we reach our target, the trailing is stopped, and we have a seasonal sell. Get rid of the long position and switch to a seasonal sell. Would that be an example of what you're talking about?
Yeah, or even staying with one strategy. Let's say the channel strategy that you presented here now. It's just basically switching between, let's say you use stocks, which stock to use at any particular moment in time, because there's a higher probability of working at that particular time. Maybe there's a higher rate of change in the last X number of days or whatever, to select that one for the strategy. And then another stock is better later on because it has a better rate of change, or whatever criteria is used.
I am very confident that would work. It would be very effective. It would take somebody a lot smarter than me to do that. So I like to keep things simple, but I think it's a very effective way to do it. And certainly with the computer power we have now, it would be very easy to do that. I think it would be a very good thing to do.
Okay, thank you.
Sure. Any other questions?
Yes, Jake, you had mentioned that for seasonals, you were using a trigger, I
Yes.
believe your 888 strategy.
Open call.
Could you quickly elaborate on that one so the group can understand how to use seasonality?
Sure, absolutely. So here's the thing. If you have a seasonal trigger that's been right 80% of the time or more, you really don't need a trigger because you can't do much better than 80%. And using a trigger may keep you out of some trades that would ordinarily have made money. But if the accuracy is less than 80%, you want a trigger. The trigger is the 8 open close. Let me go back to a chart here, show it to you. Example, the red line is the 8 period simple moving average of the close. The blue line here, or the green line, whatever color it is the 8 period simple moving average of the open. On this day, which was the day to buy a seasonal trade, you will notice the red line, which was the 8 close, was above the green line, which was the 8 open. That means the trend, based on this methodology, had turned higher. Since this was a seasonal buy trade, and since the timing trigger confirmed that the trend was now up, the seasonal had this path of least resistance, and it's therefore triggered to go long. Is that helpful?
Yes, thank you very much.
Yeah.
Do you use a stop, like a 3MA stop with it, or just flow with it till the exit date?
With the seasonal?
Yeah.
Every seasonal has its initial stop. So when we look at the seasonal printout, it'll say stop 9%, 3%, 5%, whatever. Once we reach the first profit target, which is the percent average profit, our stop goes to break even, or we trail a stop using the 3MA law, which is described on the video that I will send you.
Okay.
Does that help?
And lastly, is there a way we could access or subscribe to this seasonal trade data?
Seasonal Trader has a trial subscription. I think you can get it for something like 3 weeks. It won't cost you anything. If the trial subscription doesn't work at the website, let me know and I'll help you, because we just moved servers to an AWS server, and so there's some parts of the website that are not working. Any other questions?
Very good, Jake. This is great. Looks like one more. Looks like we got somebody else coming up here. Well, let's see.
Yeah, a quick question on this 8 open, 8 close. This indicator, is that programmed, or is there anything can find in some of the trading system?
It's very easy to program on any software package. If you're using a simple 8MA close and 8MA open, very easy to do. Is that what your question was?
Yes.
Yeah, very easy. And you can do it on any software package whatsoever.
Thanks.
And by the way, it's a very excellent trend indicator, so that if you look at any trend, regardless of seasonal, you'll find 8 open, 8 close turns like this. It usually predicts a big move up, or vice versa, a big move down when it crosses in the other direction. Okay, any other questions? I'm happy to answer as many questions as necessary.
Just one quick question on the moving average channel trade. The targets are twice the difference of the bandwidth, or do you take like 50% off at just the bandwidth itself?
I'll show you. So let's take this example of Tesla. 2 bars above the top, Williams above the moving average, buy setup, buy trigger. Take the range into channel, double it, add it to the close of trading on this day, you get your first target.
But you're not entering there, right?
You're entering right over here if you're doing the aggressive trade. If you're not doing the aggressive trade, you're buying right over here. You're taking twice the width of the channel, putting your stop down here. Your target is the top of the channel, and that gets hit the next day or the same day. Did I confuse you?
So if you do the conservative entry, you take your first target at the top of the channel.
Correct.
Is the second target twice on top of the channel?
Correct. Correct. Absolutely correct.
Okay, thank you.
Let me say one more thing. Take this day right over here. Remember this. I only know what this number is at the end of the day. But this would be my buy number for Monday. My buy number for this came from here. So if I had a buy order at this price for the next day, I would be filled right on the open. I want everyone to be clear about that because I don't know these numbers during the day. They will change all day long every time there's a new high or low for the day. So I'm not looking at the intraday chart. I'm looking at the chart as of the end of the day. Is that clear?
Right.
Okay. Any other questions?
Hi, Jake. Could you talk about, maybe 1 or 2 or more, if you care, of periods of low performance for you, or significant drawdown, something in that range? I mean, just how you dealt with downturns and.
In other words, in my history, when I had bad performance, what did I do?
I'm thinking more near term because your system's more, this is more recent. I'm not talking to, don't go back to 87 or whatever.
In near term.
Basically, what didn't work?
What didn't work?
Or when didn't it work as well? Like notably, where it could have been a really small percentage gains or periods of loss.
The seasonals have been very consistent. I've never had a big drawdown with the seasonals. They've been very consistent and very laid back. In other words, not a whole lot of back and forth performance, not a lot of volatility. The channel has always frustrated me because I get frustrated when I see these big moves and I didn't take them because I'm doing the conservative trade. I would say that at the beginning of this year, I had a January, February, things didn't work as well for me. I've never had any really huge drawdowns with this methodology because what happens is this: as soon as I get 3 or 4 losing trades in a row, I cut back on my position size, and that saves me every time. There's been a very few times in my life that I completely stopped trading, and that only happened after I wiped out an account many years ago. I'm not sure if I'm answering your question the way you asked it, but I'm trying to think about it.
Jake, I trade seasonals too, and I know the fourth quarter of 2018, in October, Powell said he's going to raise interest rates, and that quarter was horrible. And that's usually a bullish season.
Yeah.
So I'm wondering how you did. I mean, not that you have your stops. It's not like you would have gotten wiped out, but that probably would have been a tough period, I would imagine.
We had a 16% drawdown.
There you go.
Yeah.
Okay, that's the kind of thing I was looking for. Because I understand the way you trade, you shouldn't get into too much trouble almost any time. I mean, and I understand that. That's why you would have to tell us when that would have been.
Well, what happens is this: I'm always looking at my overall performance. So when I'm trading 4 strategies in different accounts, the ones that become less profitable are balanced off by some that become more profitable. I mean, I'm getting a lot less volatility, but I understand what you're saying.
Okay, so that makes sense. This does answer my question.
Okay, good. Well,
and thank you.
Question, please.
What?
Question, please.
Absolutely.
Do you worry about crop reports or Fed announcements or earnings?
I never worry about them. I never know when they're coming unless somebody tells me. I don't care about them. I can usually predict them with my methodology. If there's a report coming, the methodology will usually, not always, but usually have you on the right side of the market. I don't think about fundamentals. It's just never been right for me. Fundamentals have always screwed me up. That's the best I can tell you.
Okay, thank you.
And it's not to say that there's some people out there who know fundamentals really well. There are many people who really understand their crop reports and what it means. I'm not one of those people. I tried to be, but it didn't work for me. More questions?
Yes, I have a question.
Sure.
At the beginning, you mentioned the inside bar.
Yes.
How do you set up for that?
How do we set up for that?
Yeah.
You mean how do you set up for it, or what does it look like?
How do you, yes. How do you trade with it?
Okay, well, let me see if I can find one on the chart here. Hold on a second. In fact, let me go all the way back. Hold on a second. Find another chart. Inside bars are very rare. Okay, this would be an inside bar right over here. This range traded within the range of the day before, okay? Usually, after you have an inside bar, if you trade below the low of the inside bar or above the high of the inside bar, the market moves in that direction. So you'll notice what happened. Inside bar, we traded below the low of the inside bar, and then we collapsed. Inside bar, trading below the low of the inside bar, and we move lower. So that would be a very quick example. If you send me an email, I can send you more specific examples, but I think I've answered your question.
Thank you.
I probably confused you if I didn't. So.
No, it's the same inside bar strategy that we had talked about before.
Okay. More questions?
Okay, Jake, if you could quit sharing the screen, what I was going to do is I was going to just show people some of the stuff that is on our Excess Profits website so that people can use it. I'm going to actually try to transpose some of what you've done here into our calendar, and so that we can capture it for posterity, so that hopefully we'll get more than 7% of the people actually utilizing some of these seasonal trades.
With that, let me say one more thing.
Yes.
I said when I started, it's my sincere desire to improve what people are doing. I have made a lot of money in this business. I made a lot of money trading. I think at some point you have to give back. If it's true that there's a good place and a bad place when you die, if I can get a lot of insurance by giving back and going to the good place, I'm all for it. So that's my sincere desire. I don't need to sell you anything. I've sold people enough things and made enough money trading. But my sincere desire, if you're successful with what I'm teaching you, or if I changed your life in a positive way, send me an email. That will be my thank you. That's all I need.
That's great. So you should see my screen here with the Excess Profits website.
Hey, Ken?
Yes.
Before we go on, let's give a very big thank you to Jake for presenting such wonderful and valuable material and so selflessly giving back. I want to recognize Jake for doing what he's doing, and a big thank you from the bottom of my heart, Jake. We truly appreciate
Excellent.
it. Yeah.
Yes, thank you.
Thank you.
Applause all the way around. Absolutely.
Yes, very much appreciated.
Very much.
Thank you.
Yes.
Jake, do me a favor, don't change.
Yes, thank you.
Thank you.
All right. So what I have here is the Excess Profits website. If you go to the group calendar, you could see I captured, I don't know, there may be more of them, I don't remember. I only look at it the next month in coming. And here you can see the buy the cat trade, and you can see giving credit to Jake Bernstein for coming up with this. I don't remember exactly when I heard his presentation, but you can also see the YouTube video that talks about it, I guess. And so I've got it on the group calendar. Hopefully people will utilize this group calendar. It looks like only 7% of the people in the audience, or the people who voted, actually did it. So here was the entry. It talks about it here. and then you can follow on with the exit here. So yeah, it worked out. It's been working out really, really well for me, and I thank Jake for it. There is the other seasonal trade, which I haven't put on, which was the Thanksgiving and the Christmas one. I have indeed heard of those things in the past. So I think what you were saying, Jake, was enter on the 22nd and exit on the 23rd. Is that correct?
The seasonal trade is enter on the 22nd, and it's on the presentation. Let me look at it. I think it's exit on the 27th.
Oh, the 27th.
On the PowerPoint, which I will send to you.
Okay. Okay, great. All right, cool.
Cool.
So yeah, we'll see if we can't put a few more of those things into our group calendar so that other people can follow along.
Hey, Ken, I also gave a presentation in September of 2019. It's in your list there, presentations on seasonality. If people want to check that out.
And when?
2019, September.
2019, September. Okay, yeah, Scott. So here's a seasonality one by Scott that he did. Okay, cool. One other question I have for you, Jake, is what do we do on Monday?
Well, first of all, there's a very, excuse me, very famous book written on that subject. It's called Don't Sell Stocks on Monday by Yale Hirsch. He researched every Monday going back many, many years and came to the conclusion that Monday is usually an up day. Many bottoms have occurred on Mondays. So the one thing I try not to do is to be a seller on Mondays. That's the best I can tell you.
Okay. All right. Sounds good. Sage words. Let's see, anything else? I don't know if you ever follow Michael Jenkins at all? Have you ever seen his work, Jake, or not?
Name's very familiar.
Yeah, so he has this thing I've called the Jenkins cycle. He basically sums up the volume. I'm using it on SPY here, and it's pretty nice at helping to predict when the bottom of the market's going to be or when the tops are going to be. It just basically shows the extent of a move. You can see horizontal moves, and the market moves in a horizontal fashion for SPY is based on 600 million shares traded. And it seems to be pretty well predicting. Over the years, the 600 million has changed. It's been as low as 500 million and as high as 800 million. And it seems to change somewhere around the January timeframe. I have no idea what is the driving force behind it. Oh, I'm putting that on the wrong screen. Holy smoke. Let me put this down on the right screen. I'm sorry. Oh, there it is. So this is the Jenkins cycle. I was pointing to it on the other screen I had. So it basically is nice to be able to predict or anticipate when the extent of a move is over. So after 600 million shares here traded, it tends to change, or it tends to go flat for 600 million, and it goes up at some rate, and then it goes flat again. So it seems to be pretty regular. I use it just to basically tighten up my stops. So if I'm on the short side, I will be tightening up my stops as it approaches within a day or two of it approaching the end of that cycle, and then also on the upswing too. It's been really nicely consistent for, I've been doing it for about 20 years now, I guess. And the rule of 13, this is something that has was years ago. It tends to play out. It says if you have a move of 13 up bars, being a greater high, greater low, or greater close, you end up on an uptrend. And it also allows me to tighten up my stops behind it. And when it does stop out, I'm just using the previous day's low as my stop, and that gets me out kind of nicely. So whenever I see a rule of 13 come close, what I thought was interesting on the last few months here, the rule of 13 didn't really hold because we had these upticks. But if you look back 13 bars, it does indeed seem to be pretty good at predicting the sawtooth waveform of the general market. And then here we're back into this cyan is the start of the 13 bar rule of 13, and then the red bar is the end. So when it does that, you either get a plateau or you get another, it may actually be reinitiated. So it's just something that people in our group have been watching over the years. I don't know how many other people use it besides myself. We know a few, Ed and a few other guys have been using it as well, just to tighten up their stops when they're getting close to an end of a cycle.
Hey, Ken?
Yes.
Ken, quick question on that rule of 13. It's not 13 bars, right? It's 13 higher highs or 13 higher closes. Is that correct?
It's a higher trend is defined either high or low, is a higher high, higher close, or a higher low. All of those determine define a higher position. So that increments the count up number
Okay,
here.
yeah. Well, there's typically about a 16 bar cycle, 16-day cycle on S&P. Of course, it changes a little bit here and there. So your count also fits in with that as well.
Yeah, so here's 13 bars down, 13 bars up, 13 bars down. So it seems to be, the rule of 13 seems to be coming up more and more and more often. I use on the K-stochastic trading over this past year. This one has been over, I started the trading the K-stochastic more than 10 years ago, and I back tested that for 10 years. And it's returning, this started out about $100,000, is 250, about 150% here in this last year on the SPXL. And then the TNA, it started at 100,000, it's up to 300,000, 300.
How are you using your K-stochastics, Ken?
How what?
How are you using your K-stochastics? Maybe you can explain it to the group.
How long? I've been using it for...
No, how? What's the strategy with K-stochastics?
Okay, so the K-stochastic, if you go to the website, the presentations, you'll see a K-stochastic in this thing here. K-stochastic. And you'll see the presentations on here. From 2015 is when I started making presentations about it. And you can actually download the study here for TradeStation, for Thinkorswim. And if you go to Ken.XS Profits, you can download the code there. There is TradeStation code here, and you can actually download the code for the K-stochastic in here. Yeah, here. And so you can download the code there and just use it as you will. So part of what we do is we're sharing what we've learned, and it produces some nice entry points. This is the last entry for TNA, which came pretty darn close to the bottom. It tries to put a little, on the indicator, it actually puts a little vertical bar that says, here's where you want to trade it. And I actually coded the strategy, and the strategy has been back tested, and it works pretty consistently. It's basically waiting right now for the price action to drop below this adaptive moving average. Once it drops below it, then the next day, if it drops below that low of that price, then it exits. And you can see the previous exits here on the trades. So it's still doing pretty well. Let's see, and so talking about trades, let's see here.
Can I interrupt you for a second?
Yes.
I'm going to take my leave now, and I want to thank everyone for the opportunity to speak to your group. Everyone's been very polite and respectful, and I appreciate that.
One more thing, Jake, I wanted to show you. If one of the guys of our group actually tweets his trades, if you go to @random4 on Twitter, you can actually see these trades. And Steve, I don't know if you're still there. He's he's up over 100% on these trades. He tweets them out to the world.
Beautiful.
And it's interesting. Like you said years ago, not everybody has the discipline or the abilities to do these trades. And it's pretty amazing. He tweets it out to the world. And I think there's about 400 followers that he's got that are actually following these trades.
Great.
And great returns. So anyway, thank you again, Jake. I do appreciate it.
Appreciate it.
Jake, I had
Thank
a
you,
quick question. I had a quick question. Sorry, I may have
Thank you,
missed.
Jake.
No problem.
Just a question, Jake. For the seasonal trades, when was the enter and exit? When the day? For the open, for the close? Did you
Close.
mention it?
Close of day.
Sorry?
Close of
day.
day.
End of day. Okay, for both enter and exit.
Yes, sir.
Okay, thanks.
Thanks again, Jake.
Care.
Appreciate it.
Thanks again.
All right. Okay, anything else? Let's see. One other thing is people usually ask me about a money flow. And if you look at the money flow for all of the ETFs, the only one that is pulling money in is the TNA. Oops. Is TNA here? Is the small cap, IWM. So IWM money is flowing in and we've got a nice trend going on. So I don't expect that to stop. It doesn't look like it's going to stop anytime soon. The Dow is actually money is flowing out of it. Money is flowing out of the Qs and money is flowing out of SPY. So you don't see the trend as significant as you see in the small cap. And then there's transportation and the basic materials. We have money flowing into them. The price action is not going up as fast as what I would have expected. We do also see money flowing into the financials here. So just wanted to give you that a quick update on money flow as I see it. And that is all I had. Does anybody else have anything else? We're 2 minutes before we were going to end this meeting. Anybody else got any comments, questions?
Well, how about just a comment? I remember I've been saying for the last couple of months that this is what it looks like before markets hit new highs. And I don't know, just it seemed like there were a lot of doubters of the bull market kind of continuing through this period and through the election, which, well, I don't know. I just kind of doubted.
I have a question about the S&P 500 now that Tesla's inside. I mean, now we've got something like 7 of the major corporations in the world in the S&P 500, and how diversified is the S&P 500 now? That's it.
I think Tesla is just going to be a small drag on the S&P for the next year.
Okay.
Small drag.
Oh, that's okay. Anybody else? No. Okay.
I think everybody left.
No, we still got 61 people.
Oh, okay. No, I stand corrected. I don't know.
So,
I'm not looking at the gallery.
Yeah. Well, there's gallery and then there's participants. You should have ability to take a look at the participants in here.
Oh, I'm on a small device, so I don't pan back and forth. So I just look at the active speakers.
Got it. Okay. Anything else anyone's got? Any questions, comments, any suggestions? What are you doing on Monday?
How about the open question of what's going on next year? What do people think?
Down.
One down.
No other bulls for 21.
There will be change.
Didn't you guys learn anything from Jake? It doesn't matter what you think.
Oh, well, I wanted to ask him about people who, do predict decently, but I figured that's not, well, he's against that. I think I know his answer without asking it. And he doesn't really believe in it. So, why?
It's not that he doesn't believe in it. It's just that he can't make money at it with his style.
Right. Not believe in it for himself. So there's no. I thought there's no point in discussing that with him, right? It's like, well, yes. He believes some people can, some people do, but I'm guessing he thinks it's mostly bunk or luck.
I think it's okay to have opinion is a bias, but if you have to realize when you're wrong. So because sometimes you will be wrong, maybe more often than not, but you just need to have a plan to decide and realize when you are wrong and that your opinion needs to be changed.
Sure.
Yeah.
Mitigate.
So I don't think there's anything wrong with an opinion.
All right, people.
right.
I want to thank all of you for attending. I am going to close it down here. Hopefully this will be a good one. Jake did agree to allow me to post this to our website. I will see if I can get him to allow us to post the video recording that he's talking about. I would think that it would be available on YouTube, but we'll see if we can't get that up there as well.
Well, if somebody gets it, if they could forward it to the group, if it comes as an email attachment or a link,
Yeah,
then
if it's a video, it's going to be huge. You don't want an attachment.
Oh,
But,
well, yeah, sure, right.
Yeah,
I mean,
so
the link to it, if it is something that could be forwarded.
yeah, the videos that I've been uploading on these things have been 1 gigabyte.
Sure,
And
of course.
on YouTube, so it's pretty significant. And it takes hours to transfer it up, to transfer it down and stuff.
There is a YouTube video called Setup and Timing Triggers presented by Jake Bernstein a year ago, and it's in the from Metastock, their trading platform. So I don't know if that's the same one or not.
I wonder.
It'd be worth a look.
One. Yeah. Okay.
He said it was called 6 triggers or 6 something.
Yeah, it's 6 best timing triggers that he said he would send if we emailed him, but maybe Ken, rather than all of us bombarding him with an email, if you could email and ask him for it and then see about posting it to Excess Profits.
Will do.
Yeah. Well, thank you to Ken and Jack for getting Jake to present to us. I appreciate, getting really good presenters from outside of the group too.
Yeah, thanks, Jack.
Yeah, thank you, Jack.
Yeah. So, all right, guys, I am going to close this down. So thank you. Have a happy holidays. And I wish you all very happy and prosperous New Year.
Thanks, Ken.
Thank you, Ken.
Thank you.
You should have worn a Santa suit though.
No, it was
really
excellent. That was a good background, and
that's good.
There you go.
Yeah, it's better than I would have been.